Hey gang, Akil here. Happy Masters Sunday to you and welcome to another episode of The Trading Edge, the weekend edition. So for you guys that are new, if you notice that this is Trading Edge number 55 or something and the last one you see here on YouTube is 50, well, it's because this is typically a daily video that my trading partner Jason Greystone and myself upload for our Tier 1 trading members. However, when we get some time on the weekend, we try to do a public version as well. So that's why the numbers aren't quite lining up. It's not you. I don't want you wasting any time trying to look for them. Today, we're going to dig into a few structure-based trading opportunities on the dollar Canada and the dollar yen. So switching it back from patterns to structure, trying to show you guys a little bit of everything. But before we get started, I want you guys to click the link below this video or associated with this video. It is a link to a free training that I did called The Process of Trading. There's no strings attached. There's nothing to sell you. It just was a pretty cool training lesson that I did, and I want to share it with you guys. So click that link. Make sure you watch the video. Let me know what you think on social media, of course. And I hope you guys enjoyed today's episode of The Trading Edge. Let's dig into the charts. All right, so let's kick things off with a look at the dollar Canada. And this has been a pair that we've been tracking for a few weeks now, not only in our live trading rooms, but in our Trading Edge series as well. And it's an interesting pair because we sort of had a shift in bias. I'm not sure. I know we talked about this in Trading Edge 46, I believe. I'm not sure if that was a public version or not. But to give you guys a little bit of a recap, what we had here on dollar Canada was initially a trend continuation setup as price had put in a new structure high right here. We then looked at this pullback as being our outside return, and we were hit at the time with a very nice symmetrical double bottom, very, very close to the previous structure support. And initially that is a sign for a buying opportunity, but as the market spent more and more time at that level, our mindset shifted from a strong buying opportunity to a bearish breakout opportunity. And not to get too deep into that, but that's something that really has been a change in my mindset. I think I made it probably about 3 years ago. The fact that the more time, I used to think that the more time price spends at structure, or the more retest structure gives, the more powerful that level of structure is. And that's something that has completely flipped again within like the last 5 years. I think 2 or 3 years ago is when I started making the change in mindset to really, I have a real estate business. It's really similar. Price is very similar to real estate where if there's a good deal in housing, it doesn't really last that long, right? Good deals don't stay on the market that long. Someone snatches them up. The same thing has to go with trading, where good trades don't last that long. So the more time price spends at a level, typically the worse opportunity it is. And I know that's hard to wrap your mind around, but based off everything that you're typically taught on the internet, but it's 100% true. And lo and behold, we did see a rejection of our level of support here and a breakout to the downside. And doing so, we formed what is called a head and shoulders pattern. And a head and shoulders pattern it's not as complicated as it sounds. It looks something like this, right? It is a classic reversal pattern in the market where you have a left shoulder over here, you have a head, you have a right shoulder over here, and in this level of horizontal support, and I guess you can make it a trend line as well. I prefer to use horizontal support and resistance. This is going to be called your neckline, and you're looking for a break of that neckline to really invalidate the previous trend and confirm that the market is now either going into consolidation or maybe going into the opposite trend. And for you guys that are going to go ahead to watch the free training that I attached to this video, this is one of the trading opportunities that sparked the whole training on really simplifying trading and not making it more complicated than it needs to be. But initially when this happened, we were actually looking for a shorting opportunity. And what I'm going to do is I'm going to throw in a short clip of that instead of re-explaining it. So check out this short clip from a previous Trading Edge video, and I will be right back. What I'll be looking for is a retracement, so a pullback. And I'll be looking for a pullback to 2 levels in particular. The first strike level will be right here, a zone between 128.23 and 128.54. The second level will be right up here. And you can see that both of these levels come at previous levels of structure as well. Not only are they small little retracements in the market, right? But look left, structure leaves clues, support, 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 support. Look left, structure leaves clues as well, support, and it's right at the upper end of this VS1 support zone as well. If you want to add a little bit of confluence to it, we can also bring on our Fibonacci retracement tool from our swing high to our swing low. You'll see that we have a 382 Fibonacci retracement right in this first zone. We have a 50% and a 618 Fibonacci retracement hiding out right in that second zone as well. Let me just see if there's anything else here. 618 here as well. So you can get a little bit of Fibonacci influence there. But so what you would be looking for as a pullback trader is price to pull back to this level, a chance to get short either here, or if price returns to this level, say we break through this level, it gets invalidated, or say, hey, your risk reward just doesn't work, looking for a retracement to this level, and then a chance to trade it back down to previous structure lows. So you can see we had the initial follow through from that, and that would have been our first strike entry. There is still an opportunity for what I would call a second strike entry. And what we have here is essentially a loss of momentum pattern. This is going to be called a falling channel, where price action from our right shoulder makes a high momentum move, breaking below our neckline here. And then we start to, I guess, drift lower, for lack of a better term, sort of in this falling channel, right? You see prices just, we're still moving lower, but not at the same slope as we were before. And we could look at this channel here where price is moving lower. Our RSI is giving us some bullish divergence, meaning our RSI is moving higher. And traditionally when you see this may be a little bit iffy because it comes off of a non-farm Friday, so the markets kind of move and die. But traditionally you see some type of relief out of this. So you'll see a brief type of retracement. And that's what I would be looking for a second chance opportunity at getting short. So the market to retrace maybe up to here, about 128.37s. If I draw, let's actually just do this. If I bring on my VS1 tool, visual structure indicator, wiggle my chart around a little bit. Why aren't you printing VS1s? Oh, there we go. Change it to our time frame to 240 instead of the daily. Let's get this on here. You're going to see that right in this level again. Our neckline was our previous level of support. A move back up here would come right back into that previous level of support, which should now act as resistance. So this should be a decent opportunity to look for a shorting opportunity. I got a question under my last video about fibs. Here's an example where you can use your Fibonacci extension and retracement tools. If you want to say take a Fibonacci retracement tool to help predict where price may go to, I personally use fibs secondary. I'm not a big, you guys think I am. I'm not a big fib voodoo magic guy. I don't place trades off of fibs by themselves. Aside from advanced pattern formations, which is a little bit different because it's a consistent Fibonacci level hit in a pretty consistent and specific order. So it's a little bit different. It's a combination. But as far as fibs by itself, like trading at the 3D2 or trading at the 618, not a fan of that at all. But I will use them as secondary confirmation, meaning I will have an idea based off price and structure on where I think price is likely to go. Then I can drag my Fibonacci retracement tool on, for example, in this case, and I could use this as confirmation. You can see I have a 3D2 and a 50% right inside that level in which I would expect price action to run into previous structure support, which could possibly act as resistance in the future. So that's an opportunity to get short right there. I think there is room to the downside. Again, looking at our VS1 levels, I would look for a level right around here, 126 as far as the extension goes. Let's just see something. If we copy and paste our move from our head to our neckline, right? A 1-to-1 measured move would put us right down here. Let's get a red line there. Boom. Let's even just take this move right here, our last high momentum move down. Boom, there. I'm gonna steal this red line. There we go. And let's just, since we're talking about fibs, let's just draw a Fibonacci on. Looks like a 50%er in there. Let's just take a Fibonacci retracement from our bigger swing low to swing high of our last leg up. And you can see a 50% retracement is going to be right in there. Look left, structure leaves clues. So not a bad level right here to look, project for targets as well. Right around, what is this? 27 flat will be your, that's going to be the psychological number. So let's just say 27 flat. So looking for a shorting opportunity here on dollar Canada. And let's go to the dollar yen next. All right, dollar yen, same time frames, looking at the 4-hour chart and price action is technically we're still in a bearish trend. Bigger picture, if you were to look on the daily, we're kind of in the same situation that Canada was in, where we had just broken and closed below structure, and now we're putting in that falling channel. But zoomed in more here on the 4-hour chart, we're actually at a pretty interesting location, one that I don't personally like, but an interesting one, where we're sandwiched between previous structure support and previous structure resistance. You can see this is going to be our key resistance level right here. And again, let me just bring on the VS1s. That'll make life easier for you. Never do I save it to the right chart. Oh, I do save it to the right chart. Let's put it on. Okay. You can see we have our major level of resistance up here. However, we just broke a previous level of inside resistance as well. So we're kind of trading in between both, which I don't personally like, because there's no structure is at the forefront of my trading philosophy. And, you know, I base my whole IPDE, basically my whole process of making prediction is what has price action done at structure, where is next structure. And when we're sandwiched in between two, it's one of those situations where I don't want to sell at the floor, I don't want to buy at the ceiling. And I typically just wait until I have a clear idea. But there is going to be a trading opportunity here, because we did double top. Let's see it down on the hourly chart. We did put in a double top here. So there's a technique that we can use called the 2618, which is essentially a more conservative way of getting involved in a double top, or a way to get involved if, say, you missed it. So there's already a miniature one here, right? If you can look at this as a very small double top, and we've already had kind of a break and close below, a retest too, and then an extension down. But if you're looking at this entire move as a double top, and actually, I don't think this is going to be one. Nope, not going to be one, actually, because this is not technically a double top. We do not test the highest close. So it looks like one, but I have very specific rules. The way I teach trading is there's always going to be subjectivity in trading. That's kind of the quote unquote fun of it. But as a teacher, as a coach, when I teach my clients to trade, and when I teach them different techniques and different patterns, whether they're advanced patterns or simple patterns, I try to make it as rules-based as possible, meaning very specific rules for what everything is. And that eliminates some of the subjectivity. So, because you can imagine as a newer trader, right, you're going to, believe it or not, you're going to create whatever you want to create. If you want to see a double top, you're going to be like, ah, yeah, close enough, that's a double top. If you don't want to see a double top because you're scared, you're going to be like, ah, nah, not really. And there's no consistency in that. So we need a consistent set of rules to follow. Rules-based trading, that's very, very important. So technically, this is not going to be a double top, but we can still look for a trading opportunity here. And for you guys that are looking at this, yes, these videos are live. I don't rehearse these things. I just open up a chart that I think would be cool, and I show you guys what I think. So it's the fun part of seeing live analysis. So although not a double top, we can't technically look for a 2618 trade, but we can look for the same type of trade. And a level that stands out for me is right here, this box, right? This high momentum bearish candle in specifically really stands out for me. And also the fact that at this level, right, not only did we see some consolidation right here as far as the bearish move, and then one little green candle, which I call a pregnant pause, followed by another high momentum bearish move, but this is where we saw previous price action come down to previous structure support right here, as well as price action find previous structure resistance right there. So similar to dollar Canada, what I would be looking for is a retest to this level. We could still bring on a fib as well. Looks like a 50% again, swing high to swing low. Yep. We can bring in our Fibonacci's, we can eyeball this level, and we can look for a pullback trade, meaning if price pulls back to this level, you can look for a shorting opportunity in here in anticipation that the market may push lower to about this 106.64 level here. So 2 pullback trades for you. Again, I think we looked at patterns last time in the last YouTube video. I don't know. I do so many of these videos and I put out so much content. I don't remember what I talk about each day, or where I'm putting it each day, I should say. But here goes something for the structured traders as well. All right, so I hope you guys enjoyed that video, and don't forget the free training is only up for I think about a week or so, 9 days, something like that. But if you click the link below and watch it right away, like I think most of you will, that's not going to be a problem for you. Actually, before I let you go, let me touch on the subject of commitment, because I did get a question the other day. Now, I've been posting a lot of content. You guys know I started the Trading Coach podcast. I've been posting those episodes to YouTube as well. And I got a question underneath one of these episodes saying, hey, Akil, I love the podcast. It's awesome. It's amazing. Best trading podcast out there, right? But are you still going to post videos talking about the charts? Are you still going to post videos talking about technical analysis? And the question is, or the answer is yes, I've been doing that. You have to pay attention, right? If you're going to be committed, right, to learning from us, myself, Jason Greystone, the team at Tier 1 Trading, you've got to commit yourself to staying in the loop, whether you are a subscribed member, meaning a paid member, I guess you could say, or you're taking in the free content, right? If you are a paid member, you know that, right? We have our live rooms each and every day at the same time. We have our Q&A sessions each and every week at the same time. Our accountability sessions each and every week at the same time. And if you miss them, you know where you can watch the recordings at. The Trading Edge videos, right? The members versions are coming out Monday and Wednesday from Jason Greystone. They're coming out Tuesday and Thursday from myself. If you're a podcast listener, they used to be Tuesdays and Thursday. Now it's Monday, Wednesday, Friday, right? AM, right? Midnight, Monday, Wednesday, Friday. They are coming out across all podcast websites, even here on YouTube. And then the free version of the Trading Edge has been coming out each and every weekend here on YouTube as well. So if you are subscribed to the YouTube channel, you should get notified whenever I upload something, right? There's no excuse for missing it. If you are a follower on social media, there's no excuse just to clicking on the feed, whether it's Instagram or Facebook and Twitter, and just scrolling through the feed once a day and seeing what did we post, what did we upload, is there anything new? And of course, if you're on our email list, you'll get the email directly whenever we have something fun to offer. But the point is, if you want to claim that you're committed to training, if you want to claim that you're committed to taking in as much content as you can from us, whether you're a paid member or not, right? Make the commitment. There's no excuses for missing anything. Trust me, the way we shamelessly promote everything that we put out, you shouldn't miss a single thing. I'm committed to you guys for doing it consistently. Jason Greystone is committed to you guys for pushing content out consistently. You need to make the same commitment. And if you're already a subscriber, if you're already in our community, you need to make the commitment to sharing this content and continuously helping us reach more and more traders each and every day and growing our community stronger and stronger each and every week, each and every month, and each and every year. So if I'm going to be committed to you guys, I expect the same commitment back. All right. If you can do that, I'll be back next week with another episode of The Trading Edge. Of course, Tier 1 members, I'll be back during the week, but I'm talking to YouTube now. I'll be back next week. And until next time, plan your trade, trade your plan. Take care.